Ladies and gentlemen, good day and welcome to Sharda Cropchem Ltd Q3 and 9 months FY2026 post-results conference hosted by Antique Stock Broking Ltd. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahawar from Antique Stock Broking Ltd. Thank you and over to you, sir.
Thank you, Bhumi. Warm welcome to all the participants on the 3 FY26 earnings call of Sharda Cropchem. We have Mr. R.V. Bubna, Chairman and Managing Director, Mr. Shailesh Mandale, CFO, and Mr. Jetkin Gupta, Company Secretary on the call. Without any delay, I would like to hand over the call to Mr. Bubna for opening remarks. Thank you and over to Bubna ji.
Thank you, Manish ji. Good afternoon and a very warm welcome to everyone present on this call. Along with me, I have Mr. Shailesh Mandale, our CFO, Mr. Jetkin Gupta, Company Secretary, and SGA, Mr. Deven, our Investor Relations Advisor. Hope you have all received our investor deck by now. We are pleased to report a robust performance driven by strong volume growth and an improved product mix, supported by accelerated product registrations. This has helped us achieve our highest ever PAT for any year. Even though our strongest quarter Q4 is still ahead, the company expects this growth momentum to continue in Q4 FY26 and remain strong through FY27. As you are aware, we are engaged in the marketing and distribution of wide range of agrochemical products catering to diverse global customer base. We develop comprehensive dossiers and obtain product registrations in our own name. We continue to allocate substantial resources towards securing registrations, which strengthens our market presence and helps establish a sustainable foothold across key markets. As of 31st December 2025, our total product registration stood at 3004. Additionally, 1076 applications for product registrations globally are in the approval stage. Coming to industry dynamics, global agrochemical market is showing signs of recovery driven by revival in demand, complemented by gradual recovery in the pricing. Inventories have come to normal levels across distribution channels. In Q3 FY26, our total revenues have grown by 39% to 1,289 crores with overall volume growth at 14%. We have seen volume growth in Europe and Latin America emerging as contributor. Volumes from agrochemical segment grew by approximately 15% and non-agrochemical segment grew by approximately 14% on year-to-year basis. With input costs stabilizing, our gross margins have expanded by 220 basis points to 34.9%. As guided earlier, we expect gross margins to be in the similar range in FY26. EBITDA for the quarter stood at 246 crores, a growth of 59% on year-to-year basis, with EBITDA margins at 19.1%. For FY26, we are on track to maintain healthy EBITDA margins in the range of 18 to 20%. PAT for the quarter stood at rupees 145 crores, showcasing a growth of 366% on year-to-year basis. Working capital days stood at 70 days as on 31st December 2025, showing an improvement by 48 days as compared to March 2025. Capex for 9 months FY26 stood at rupees 399 crores. Cash and bank liquid investments stood at rupees 826 crores as on 31st December 2025. For FY26, our planned capital expenditure stands at rupees 500 crores, supported by strong project pipeline that underscores our resilience and continued focus on growth. With this brief overview, I would now like to hand over the call to our CFO, Mr. Shailesh Mahendale, for discussing our financial performance. Thank you, everybody.
Thank you, sir. Good afternoon, everyone. Coming to the quarter 3 financial FY26 performance, revenue stood at rupees 1,289 crores in Q3 FY26 versus rupees 929 crores in Q3 FY25 with an increase of 39% year-on-year. Coming to the split, agrochemical business grew by 48% year-on-year to rupees 1,141 crores, whereas the non-agrochemical business grew by 8.1% year-on-year to rupees 148 crores. Gross margin stood at 34.9% in Q3 FY26 as against 32.7% in Q3 FY25, increase of 220 basis points. EBITDA grew by 59%, which stood at rupees 245.5 crores with EBITDA margin at 19.1%. PAT stood at rupees 145.1 crores versus rupees 31 crores last year, showing 366% growth year-on-year basis. Coming to the 9 months FY26 performance, revenue stood at rupees 3,203 crores in 9 months FY26 versus 2,491 crores in 9 months FY25 with an increase of 29% year-on-year. Coming to the split, agrochemical business grew by 34% year-on-year to rupees 2,790 crores, whereas the non-agrochemical business grew by 1% year-on-year to rupees 413 crores. Gross margin stood at 35% in 9 months FY26 as against 30% in 9 months FY25 with an increase of 500 basis points. EBITDA for 9 months period stood at 526.7 crores with EBITDA margin at 16.4%, showcasing 64% year-on-year growth. PAT stood at rupees 362 crores in 9 months FY26 versus rupees 101 crores in 9 months FY25 with an increase of 259% year-on-year basis. The company has already achieved highest ever annual PAT in 9 months of FY26. We remain net debt-free company and have cash bank liquid investment of rupees 826 crores as on 31st December 2025. Looking at the performance, the Board of Directors declared an interim dividend of rupees 6 per share. We can now open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Ansh Shah from Smart Invest. Please go ahead.
Hello. Hello.
Hello.
Yes, so congratulations for these good numbers. So my question is on a long-term basis for the capex line. So with a strong global registration of pipeline of 1,070 products, we are planning to get the registrations. So can you just give an idea about typical approval timelines, and particularly in Europe, what time frame over which these registrations are expected to be active and contributing to the revenue?
Mr. Hans, your many words were not understood. I would request you to kindly speak slowly and loudly. Repeat your question once again.
So my question was, as we are planning to do a capex of around 400 crores on increasing our registration pipelines of around 1,070 products. So can you give us an idea about what time frame should we expect, particularly in Europe, in which our registration will be expected to be active and contributing to the revenues?
Mr. Hans, I don't know whether you have tracked the company's record and performance so far. I have repeatedly mentioned in every conference that registration process is full of uncertainties and nobody can predict how much time will it take. To give you an example, a registration may be obtained in 1 year or 2 years, and the same registration can take 6 to 7 years because of the uncertainties. The government authorities keep on getting new requirements, which is adding to the process of registration and also the cost of registrations. So I have no answer to your question as to how much time will we get these registrations. Thank you.
Okay, sir.
Thank you. Our next question comes from the line of Giriraj Daga from Visaria Family Trust. Please go ahead.
Hello, sir. Congratulations
Yes.
on good numbers.
Yes, sir. Thank
so
you.
my question is related to our FY27 next year. Let's say, what would your thought would be that will we able to see something like a 15% kind of a volume growth next year?
Hopefully, yes. We are very confident that 15% is achievable.
Okay. And second question, we have been mentioning that 35% gross margin is very much sustainable for FY26. Will it be sustainable for FY27 also?
Yes, sir. Maybe it goes up still further.
Okay. And last two, sir. One, CapEx guidance for FY27, if you can help us.
Sir, again, as I have told the previous speaker, the CapEx and the registration process is full of a lot of uncertainties.
Okay.
I would say it will be in the range of 450 to 500 crores. It can be still more. I cannot say.
Okay.
But it will be in the same range.
Okay. One last industry, sir. Have we seen some pricing uptick happening across in our portfolio now?
Yes, sir. As we have stated, we have passed through a very bad time about 2 years back when there was excess liquidity and abundance of stocks in the pipeline. Those have all dried up, and as the things are getting normalized, the prices are also moving. The speed is less, but it is moving up.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. Our next question comes from the line of Anubhav Mukherjee from Prescient Capital. Please go ahead.
Hello, am I audible, sir?
Yes, Mr. Mukherjee.
Sir, the agrochemical segment volume growth was roughly 15% and the revenue growth was 48%. So how much was the realization increase year on year and how much was forex gain?
1 second. See, this total growth was 38.7%, out of which volume growth contributed to 14.4%, foreign exchange impact was 12.6%, price and product mix impact was 11.6%, total 38.7%.
Sir, will it be possible to share same for specifically the agrochemical segment?
No, this is total. This is total, both agro and non-agro.
Yes, sir. And sir, the realization growth that you mentioned, is it a function of actually prices moving up or is it a impact of product mix change?
Mr. Mukherjee, your last sentence was very low in I would like to repeat the question once again.
Sure, sir. Is it better now?
Yeah.
Sir, I was asking the realization growth year-on-year that you mentioned. Is it driven by actual prices moving up of products, or is it more product mix change driven?
Mr. Mukherjee, I think you are new into the system. It is driven by both product mix as well as the prices realized.
Get that. So, sir, since you also mentioned that prices are now moving up, so do you see like scope for significant improvement from current levels also?
See, significant is a very ambiguous word. It will be growing, and nobody can predict how much, but it is on the way up, and we expect the growth in our total revenue to be around 15 to 20% in the year FY27.
Get that. And sir, this quarter as well as for 9-month FY26, Europe has shown a very good growth. Specifically this quarter, it's almost doubled year-on-year. So can you provide some color on how Europe is doing so well? Yeah.
See, I'll say there are 3-4 factors. One is good climate, good atmosphere for agriculture, and good demand for the products.
Okay. So
and our ability to meet the demands of the customers on time.
Okay. Is there any element of one-off restocking happening in Europe, or it's like more demand-driven?
I didn't understand this one-off point, but I would say it is demand-driven.
Get that. And sir, on the other hand, like NAFTA region witnessed a decline year-on-year in this quarter. So is this any impact of tariff or anything?
Mr. Mukherjee, I have repeated on various platforms and I am repeating again, agrochemical products are not impacted by tariff. As you know, they are not freely tradable products. They require to be registered first, involving a huge investment. And very few companies or people believe in this huge investment on registrations, which is an intangible asset. So saying that, fortunately for agrochemicals, the tariff is not, affecting at all, particularly to the suppliers. We are able to pass on all the tariff smoothly to our customers, and customers have no other choice to buy from anywhere or anywhere. They have to source the products only from registered sources, and registered sources are very limited for every product. And the product has to be sourced from an approved manufacturer, approved factory. It cannot be manufactured anywhere as you like. So the customer knows this, and he accepts the adding of the tariff, and he smoothly and gracefully makes the payment, and the payments are also on time.
Thanks, sir. That's great to know. Yes, sir. Very clear. Thanks. Just last question from my side.
Sorry to interrupt you, Mr. Mukherjee. Please rejoin the queue for a follow-up question.
Sure, I'll do that. Thanks.
Thank you. In order to ensure that management is able to address questions from all the participants, I request you to limit your questions to 2 per participant. Our next question comes from the line of Nilabja Dey from ESMO Research. Please go ahead.
First of all, congratulations, sir, for sticking to whatever guidance you gave for the last previous Q1, Q2. So actually, first of all, just like to confirm that you have increased earlier. You were telling your margin is from 15 to 18. Now you are putting it in on 18 to 20. Am I right? Just to confirm.
Yes, sir.
For FY20. And,
yes, sir.
And this particular margin guidance is valid for FY27 also?
Yes, please.
Okay. And in terms of the demand, you have clearly mentioned demand is improving. So can you just give some qualitative color that from what has changed from the last 6 months, apart from the inventory? You mentioned that inventory has gone down significantly at the whatever people are holding. So can you just give some color? That's my only question.
Sir, I can only answer your question in a very general way. The demand goes up when you are able to supply the goods in time to the customers. They are seasonal products and seasonal demands. So if you cannot supply the products on time, then it's a nuisance and hassle for the customer as well as the supplier. So we have been able to deliver the goods on time, and second is the quality. If you can supply goods and good quality and on right time, the demands has a natural tendency to go up.
Okay, thanks. Thank you.
Thank you.
Thank you. Our next question comes from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a very strong set of numbers. Sir, given you said, and it is already known that Q4 is our best quarter, so given such strong demand outlook, can we expect to close this year at, say, 5,400 crore type?
Maybe, or in the nearby range. Could be less, could be more.
But in versus, as in, because our last Q4 was 1,800 crore, which was very good year on year. So we expect demand growth to improve on that more than that, right, in Q4?
Yes, sir. Our Q4 is the best quarter because of the seasonality of the business. Q4 is always the best, and this year also the same trend continues.
Got it, sir. And sir, on volume growth, you said 14% growth came. So we expect this type of volume growth to continue in Q4 as well as next year?
Yes, sir.
Got it, sir. And sir, given how USD and Euro are behaving in January, I think we can have some FX gain also. Do you like to comment on that?
Yes, sir. You have understood our business more minutely and good in detail. Thank you.
Yes, sir. Thank you, sir. Thank you and all the best.
Yes.
Thank you. Our next question comes from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hi. Thank you very much, sir, for this opportunity. So just wanted to understand, so what's the forex gain in third quarter?
Forex gain?
Yes.
It should be quite good. Let me see.
Forex loss, 4.5.
Yeah. I'll ask Mr. Shailesh to reply this question.
Yeah. So, see, in the quarter 3, this quarter, we are having a loss of 4.53 crores, forex loss. And that is mainly on account of our forex payables realignment.
Mm-hmm. Okay. Understood. And I mean, in terms of tax rate also, I think our tax rate is lower. So what should one look at going ahead in terms of tax rate?
Yeah, I think if you look at on annual basis, probably it is in the range of 18 to 20%.
Okay. And why our tax rate is lower?
Huh?
Why our tax rate?
Yeah. See, if you look at on consolidated basis, there are certain geography where there is a no tax. So if you look at overall basket, there is a 18 to 20% tax for company on consolidated basis.
Okay. Understood. Okay. And on the growth part, I mean, 9 months we have grown by about 29%, and we had, I think, earlier guided of 20% growth for the entire year. So how should one look at going forward? I mean, given your fourth quarter is the strongest, so you expect this 20%, I mean, you want to revise it upwards?
Mr. Deepak, you must also see what is the base.
Mm-hmm.
The base has been always already high. Correct. In the fourth quarter.
Correct.
So we are talking about increasing from the good growth which we achieved last year.
So we maintain 20% growth, right? FY26?
Yes.
Okay.
Yes, sir.
Understood. And just one last thing from my side. Any
Sorry
new
to
region we are
interrupt
targeting?
you.
I mean, just one small thing last. I mean, it's the last one. In terms of export, I think we are very strong in Europe, NAFTA, and LATAM, right? Any new region we are trying to build our presence?
Sir, these three regions constitutes almost 80% of the world, or 90% of the world.
Okay. Okay. So you
For
want to
agriculture,
penetrate
for
deeper.
agriculture and agrochemicals.
Correct. And you want to penetrate deeper in this region only, right? That's what.
Yes.
Okay. Fair point. That would be it from my side. Wish you all the very best. Thank you so much.
Thank you, sir.
Thank you. Our next question comes from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, sir. Congratulations on great set of numbers. So my first question is on the gross margin side. So can you help me with the data of gross margin geography-wise?
Again, Mr. What is your good name, sir?
Vignesh.
Vignesh. Vignesh, again, you have to be a little more specific, loud and slow rate of speaking, so that I can understand your question very well.
Surely, sir. Sir, my question is on gross margin part of the business. I wanted to understand if you could share gross margins geography-wise for Q3 FY26.
Yes, sir. Gross margin has been 43% in Europe region, 23.5% in NAFTA region, 29.2% in LATAM, and 37% overall in the rest of the world. Overall, 35.9%.
Okay, sir. Thank you. Sir, and my second question is on the registration part of it. Wanted to understand the geographical breakup in terms of registration and upcoming.
Can you repeat your question once again, sir?
Yes, sir. So, sir, my question is on the registrations, total registrations that we have done. Wanted the registration breakup geography-wise, Europe, NAFTA, LATAM, and also wanted to know the registrations which are upcoming, that if you could give geographical breakup for the same.
1 minute. Give me 1 or 2 minutes.
Sure.
Yeah. Registration-wise, European region 1,675. NAFTA 321. LATAM 760. ROW 248. Total 3004.
Okay, and the upcoming registrations?
Oh, in the pipeline.
Yeah, pipeline, yeah.
Pipeline is Europe 698, NAFTA 100, LATAM 153, and rest of the world 125. Total 1076.
Okay, sir. So got it, sir. That's all from my side. Thank you.
Thank you.
Thank you. Our next question comes from the line of Hitendra Pradhan from Maximal Capital. Please go ahead.
Hi, sir. I hope I'm audible. I'm new to the sector, so please bear with me. My question is related to the China export rebate policy. They are ruling back the incentives from April this year, and the incentives on the formulation will continue. Sir, I would like your reading on the impact of this policy on the prices, on technicals and on formulations, and on your business as well. Thank you, sir.
Mr. Hitendra, again, your question is very long and voice is low and no, what do you call, energy.
I can repeat. I can repeat. Sorry. There is a background.
Put some energy in your words.
Yeah, sir. So
yes,
it is related to the China export rebate policy. They are
What is
rolling
China
back the...
export rebate policy? What is China export rebate policy?
Yes, sir. So they are rolling back the incentives on from April of this year on the technicals. Like they used to provide the export incentives to their technical suppliers, which they are rolling back from this year, from April of this year. So we are expecting that, that will have some impact on the prices.
Mr. Hitendra, if you have understood China and the style of working of Chinese government, you will have to understand that they are not very transparent.
Right, sir.
These informations are not made available to the public, particularly foreigners. So it's very difficult for me to comment on this. The only thing I can say that China does give some incentives to the Chinese citizens for export. Now, how much and what is their policy and what is the variation, it's very difficult to gather, and it doesn't affect us.
Right, sir. Okay.
You understand?
Yeah, because we are on the formulation side mostly. Yeah. Okay.
Thank you. Our next question comes from the line of Dhruv Muchhal from HDFC AMC. Please go ahead.
Yes, sir. Thank you so much. Sir, Europe has done very well for us this quarter and even for 9 months, even for last few quarters also. So, sir, is the growth driven by getting new dealers or probably entering new geographies or adjacent regions in the European market, or a mix of both, or so what's driving this?
Sir, it's a mix of both. New dealers and getting better access to the market.
So we have also expanded the geography. Say, for example, if you're operating in one part of the country, we have also started operating in another part of the... So is that also driving growth?
Yes, that is also there.
And I understand you probably will not have this, but is it possible to share how much is probably coming from existing dealers, which is driving growth, and new dealers, which are driving growth? If it some degree, which can give us some more comfort in terms of the growth.
Mr. Dhruv, I think I know you for last 10 years. And I know you are very intelligent. So you already answered the question. You know more than me on this part of the question.
Sure, sir. And just to understand a bit on the Europe thing, sir, is it a few molecules which are driving growth, or it is across molecules which is that we are seeing growth?
It is across molecules.
Across molecules.
There would be some molecules you are driving more, but then it's very difficult to differentiate.
Sure. Great, sir. That's all. Thank you so much and all the best. Thank you.
Thank you.
Thank you. Our next question comes from the line of Sonal from Prescient Capital. Please go ahead.
Hi, sir. This is Sonal Minhas. I hope I'm audible.
Yes, please.
Sir, I had a small question to ask on the working capital. We see that your working capital days have reduced from 98 days in December 24 to 70 days now. Just wanted a subjective commentary on what is it that is company has done to reduce the inventory days. If you could give us a subjective feedback on it, that would be helpful.
Sir, I would say consistent increase in the demand and confidence of the suppliers on the credibility of Sharda Cropchem Ltd. They are giving us very comfortably extended credits, and again the demands are increasing, so the customers are also paying in time. And European region is known to be the most disciplined region for the question of payments. They are very punctual. Sometimes they pay before time.
Got it, sir. This is helpful. Sir, second question. This quarter, the NAFTA region has degrown for the agrichem segment. If you could give any subjective commentary on what is it a one-off, or if you could give us any guidance on what has happened in that region as far as demand is concerned, that would be helpful.
So there is nothing that is available to us and which is open and transparent for this region. it has degrown. Could be partly, I think partly it's responsible for the climate. There's been very heavy, unpredictable and unusual climate conditions that has affected the demand.
Got it, sir. That's it from my side. Thank you, sir.
Thank you.
Thank you. Our next question comes from the line of Rochelle Selarka from Pink Wealth. Please go ahead.
Hello.
Hello.
Yeah, sir. Am I audible?
Yes, please.
Yeah. So my question is that, regarding, just wanted your thought process, on the recently India, we have signed a FTA, India EU trade deal has happened. So how this can, benefit to our company or the sector? If you can just give some, your view on it.
Sir, what I have seen about this treaty, there is no mention of agrochemicals anywhere. They are talking about cars and this thing, import of cars into India and all those things, which are totally unconnected with our business model. As far as agrochemicals are concerned, I don't think there is any mention or any impact on the either tariffs or any other things. So
Okay.
Our business remains as usual and it's growing.
Okay, sir. Got it. Thank you, sir.
Thank you.
Thank you. Next, we have a follow-up question from Anubhav Mukherjee from Prescient Capital. Please go ahead.
Hello, sir, I'm audible?
Yes, please.
Sir, just one question. Sir, compared to like pre-COVID levels, currently, like price realizations, how much are they still down compared to those levels? If you could share some color.
They are quite down. They are quite down compared to the pre-COVID level.
And is it like some geographies are more affected, or is it like similar across geographies?
Sir, you are asking a very difficult question, and we don't go into so many details. We just face the situation as it comes, but we don't sit down and then analyze what geography and all that. In general, the price levels are low. Pre-COVID level prices were very high, but again, the costs have also, our sourcing costs have also gone down considerably. So in terms of percentage, we are better off than pre-COVID level.
Yes.
It is margins, Sharda.
And sir, on the procurement cost from China, that you are seeing at stable levels, or is there some inflation happening there as well?
No, there is a slight, improvement time to time. The prices are going up, sourcing as well as selling prices.
Great.
And margins are improving as far as Sharda is concerned.
Great. Thanks, sir. That's all from my side.
Thank you.
Thank you. A reminder to all the participants, whoever wishes to ask a question may press star and 1. Our next question comes from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for the follow. Sir, recently there was a news article that China is looking to tighten agriculture chemical exports. So, हमारे पे तो कोई issue नहीं हो रहा ना? Are we able to source effectively, easily from China, or is there any issue on that front?
Sir, I am hearing for the first time from you that they are trying to tighten their agrochemical resources. As far as we are concerned, we are not impacted at all.
Nice to know that, sir. Nice to know that. Sir, on, as in, again harping on the same question, Q4 में things are looking like 18-20% growth can come in Q4 also, or how are we thinking? And pricing से भी, if you can comment के how much is it improving, maybe year on trend?
Sir, you have put the question first and then also answer. I am again repeating, we expect the same growth in Q4 also.
Both in volume and pricing?
Yes.
Sure, sir. Thank you and all the best.
Thank you.
Thank you. Our next question comes from the line of Vivek Rathi, an individual investor. Please go ahead.
Hello, sir. Congratulations on the set of numbers. So I have a simple follow-up question on the previous participant asked on the
Sorry to
European
interrupt. Mr. Rathi, can you please speak a little louder?
Okay, am I audible now?
Yes, this is
Sir,
better.
you are audible, but you are speaking very fast. You have to also speak slowly and put more energy into your words, slowly and loudly.
Okay, sure. So my question was in continuation to previous participant who asked on the European this thing that it is not going to impact your answer. So just wanted to understand, because from previous calls I remember you said we still source maximum or almost 100% of our different supplies from China. So are we looking at anything changing with this or no? Hedging our resources and for getting some supplies from India or some other country, or still we are completely reliant on China?
Mr. Rathi, I have not understood your question very clearly, but what I have understood, you are probably asking whether we are also looking for sourcing from India and China and all that. Am I right?
Yeah, multiple countries, because I thought maximum was from China.
Now, Mr. Rathi, again, I think you are not exposed to the agrochemical business very well and in detail. I have explained many times that registration is very critical, and when the authority registers the product, they not only register the product, but also the manufacturing plant from where we are sourcing. It is a condition that registrant can source it only from the plant which has been exposed for the purpose of registration. We cannot change the manufacturer, so we have to buy it only from the same source. We are given a freedom to add another supporting manufacturer. So as far as Sharda is concerned, we are having at least 3 or 4 manufacturers for the same product and for the same registrations, which gives us a flexibility and we are not exploited by the manufacturer. But I cannot have a choice that I can source one product from India and next time I from China and all that. And we have very little sources, registered sources from India. Majority of our registered sources are from China. Have I answered your question, sir?
Yeah, you did. Thanks a lot, and sorry for confusion. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 now. Our next question comes from the line of Sachin Kasera from Swan Investment Managers. Please go ahead.
Good afternoon, sir, and congratulations on delivering a very strong set of numbers. I had just one question. We are already sitting on a very good amount of cash on hand, and going by the strong outlook we are talking of, I think the cash in the balance sheet is going to increase further. So are we looking at some acquisitions, or we will look at increasing the dividend payout, because the very high cash on the balance sheet is then going to start impacting our return on capital employed?
Sir, we have already started looking into the line that you suggested. We are looking into increasing the dividend, but we are not looking into the acquisitions.
Okay. Great. Thank you.
We have declared a very good dividend for this quarter yesterday.
Okay, sir. Thank you very much.
Thank you.
Thank you. Our next question comes from the line of Pratik Patel from Counter Cyclical Investments. Please go ahead.
Hi, sir. Sir, our sales from top 10 dealers in the last year was something around 16 to 17%. So is that similar to that number this year as well?
Mr. Pratik, again, I'm sorry, I have not understand your question. Again, I request you to speak slowly and loudly.
So my question was, last year, our top revenue from top 10 dealers and distributions was something around 16 to 17%. So that number in current year also, it's near to about that percentage?
Yeah, it will be more or less near about that.
Okay. And sir, can you show some highlights on the top 10 products revenue share? Means what would be the top 10 products share in our revenue?
1 minute. Our top 10 product share in revenue is about 43% in this year.
43% for this year. Okay. And have we seen 43%? Okay.
Yes.
Great. And sir, you have said that, for the current quarter, the product registration for Europe is 698, which last quarter was something around 710. So this quarter, we have got approval of something around 12 products in Europe. So is that correct? My understanding is correct?
No, 698 is, what do you call? I'll ask Mr. Shailesh to reply this question. Mr. Shailesh will reply this question.
Yeah, so can you repeat your question about the Europe registration?
So last quarter, the number for registration in Europe was something around 710, which has been reduced to this quarter at 698, if I'm not mistaken. So, so my understanding is correct that 12 products have, we have received approvals in this quarter for the Europe registration?
Correct. You're right.
Okay, great. Okay. Sure. Thank you. That's from my side. Thank you.
Yeah.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments.
Yeah. Thank you everyone for joining us. I hope we have been able to answer all your queries. We look forward to such interaction in the future. We hope to meet your expectations in the future too. In case you require any further details, you may contact us or SGA, our investor relationship partner. Thank you.
Thank you. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.